Well, new changes to how your credit score is calculated go into effect this week, and RE/MAX's Sam Correa is here to take us through them and tell us how it could impact getting a mortgage. Thanks for coming in, Sam. Nice
Morning.
to see you.
Thank you.
So this is all Equifax changes. So first, for anyone who maybe at home doesn't know, just tell us exactly what Equifax is and what it does.
Equifax is a system that actually watches your credit rating, and that's what lenders will use to determine if they will give you a mortgage, if they'll, and at what interest rate. So it's very important to watch.
Okay, and so let's take us through these changes. I guess they're just getting a little bit more strict with what they're monitoring?
Correct. In the old ways of Equifax, they would monitor your line of credit. And a lot of people think a line of credit and the mortgage are the same. Although it's registered on your title, Equifax did not typically watch old mortgages. Now they're watching mortgage and line of credit. So there's a difference. So you got to be up on your payments for both. Of course, credit cards always been there and car payments have always been there.
Yeah.
The things that they're adding is utility bills, definitely that's coming, and phone bills are already in place. So you should have automated withdrawals every month, just so you're showing you're not in arrears. Because Equifax will show when you're in arrears and how far you're behind, and that's going to affect your ability to buy a house if you don't watch that.
Yeah, so let's talk about that, because this is all, so they put all this together and how well you've done with these and whether you've made your payments, and they create a score.
Correct.
So take us through exactly what this score means and when we might be in trouble.
So you're definitely in trouble if you're under 600.
Okay.
And 680 is a good benchmark. 680, you're going to certainly see you have the ability to get a mortgage. 680 is considered a good credit rating.
Yeah.
Above 7, you're going to get the best interest rate. It goes as high as 9, but I'm told there's that's really, really unattainable.
But you can potentially save a lot of money if you've got a good score, because you will be able to get that better rate.
Well, it doesn't matter how much cash you have down.
Yeah.
If you don't have a minimum of 680, you may not even get a mortgage. So that's something you got to really watch. The higher the credit rating, the better the interest rate you get.
Right.
And there's some tips here to really learn how to get your best rating.
Interesting too. We were talking a couple days ago when we were just talking about this segment, and you said, there's really no line between sort of what kind of income people are making or anything when it comes to credit score and keeping it. I mean, you've seen some people who may be very wealthy and make lots of money, but if they don't pay attention to their bills.
Yeah, sometimes the highest net worth individuals are just not as diligent on the day-to-day payments, and when it comes down to getting that mortgage, I've seen them actually have to jump through major hoops, sometimes not even get a mortgage, because of course their credit rating is below 600.
Right.
So you have to watch that, absolutely.
Also important, you were mentioning to me off camera how important it is to check your score and be aware of it. You've got a pretty good story as to why.
Yeah, several years ago with my own mortgage, I did. My lender came back and said, everything looks good. I see your BMW payment here, and its payments are being made. And of course, I didn't own a BMW.
Right.
Actually, I owned a BMW, but I didn't have payments.
Right.
And so when we looked closely, it was actually a mistake for several years. I think it was about 5 or 10 years, where BMW had actually, someone with a very similar name had purchased a vehicle on my credit.
You're lucky they were making the payments.
Yes.
But in a situation, if they weren't making the payments and it was damaging your credit score, you were saying that the process to get that off of your credit report is difficult.
It actually took me about 6 months.
Okay.
And I was very diligent to make sure it was off my credit rating, and it was not an easy thing. So after that, I signed up with Equifax, and for $15 a month, you could check your own credit rating.
Whenever you want.
And that's the good thing to know, is it doesn't register if you check your own credit rating. So you can check it as often as you like. You can go online, you can have an account. If you go shopping with different car loan dealers and different department stores, every time you do that, it will register against your name. And
so creditors, if they're constantly checking your credit, that'll have a negative impact on your score. But if you check it, it's fine.
You check it, it doesn't show if you have an account and you sign up with Equifax. The thing to know is when you go and check when you shop, you're thinking the best interest rate with car dealers and department stores, ultimately a lender will look at that, and because it's registered every time, and the assumption is that you were denied.
Right.
And so you should never really shop like that.
Don't do too much shopping that way. Okay.
Not that way. You should know your own credit rating, and when you're ready, you should make the purchase. But just beware. Watch your credit rating, have your own account, and Equifax.ca is a great resource. Absolutely.
Okay. Yeah. Great stuff as always. And for more information, you can head to samcorrea.ca.
The Market, sponsored by Sam Correa of RE/MAX House of Real Estate.